G'day folks, Jim here from FX Charts, Wednesday the 22nd of January. Thanks for tuning in. There's not really a great deal to report today. The markets are pretty much unchanged really. The highlight of the day was the relatively poor outcome of the ZEW Economic Sentiment Survey from Germany. That had the euro under a little bit of pressure earlier on, and the dollar made some mild gains after the IMF upgraded the outlook for global growth. But eventually the dollar's given up some of those gains, and we're pretty much back where we started. There's not an awful lot out of the EU or the US today, so I don't really expect too much action in the coming session. There is some stuff out. We've got the Bank of England minutes and also the UK jobs report. And before then, we've got the Australian CPI data and the BOJ interest rate decision later on this afternoon. So we'll go and have a look at the charts. As you can see, the euro's not doing an awful lot. This is a 1 hour chart, and this is the last 24 hours or so of trade, and we're really back at this 135.60 area, which, as I pointed out yesterday, is the base of the daily cloud, and that's providing us with some reasonably strong resistance on the top side. The 4 hour charts do look as though they're breaking mildly higher, but I don't think we're really going anywhere today. The real interest, I think, will probably be on the World Economic Forum in Davos, and any statements that we may get from there. I wouldn't think anything going to be too market moving, but we might see a little bit of blip higher in the euro if the 4 hour charts do turn out to be positive. But there's a good resistance up here at sort of this 136 level, and I don't think we're really heading too much above there. 136.15.20 we may see, but that's about it. While on the downside, there's still good support. This 135.07, 135.15 today was the low. So ultimately, I think we're probably looking at a day of 135, 136. Further out, the dailies are still negative, and I do think we're going to eventually get to a break to the downside, but that's yet to be seen. And we're still finding the 100-day moving average a bit tricky on the top side. So all up, a fairly range-bound day, I think. Dollar yen, as I say, we've got the BOJ rate decision later on today, but they're not expected to do anything. The dollar has really done what we expected. It found bids at 104 and offers up here at this 104 and 3/4 level is 76.4% FIBO resistance. So once it got up there, it came off pretty sharply, really, but it's not gone anywhere. And 104 and 3/4 covered the session, and it could well do again. Although the BOJ is going to provide some volatility at the press conference, I think. Longer term, as I say, I'm still looking mildly to the downside, but realistically, there's good support down around here. So 103.70 where we've been before, and below that last week's non-farm payroll sell-off that was at 102.85, and I don't think we're going down there today. So all up, a pretty range-bound session, and I think 103.50 will cover it on the downside, and or certainly cover on the downside. Probably won't get below 104, but on the top side 105 I think probably caps that as well. Sterling, as I say, sterling actually climbed because the IMF report on the sterling economy was reasonably positive, and it's taken out this descending trend resistance. Broke up here. We went up to 164.85, 165.15.20. That remains good resistance, but the 4 hour charts are positive. The dailies, which have been negative, are flattening out, so I'm not really quite sure what to think. It's really going to take its lead from the Bank of England minutes and the jobs data. So I think until we see those, stay out of it and then probably go with the flow. Overall, though, with the cable, although I think it possibly has got some top side, given that I'm slightly bearish on the euro, I think that's probably somewhat limited. And if we saw 165 to 165.5, probably still think that's a sell for an eventual return back towards 162, 163. Dollar Swiss. Well, the dollar made it up to a high of 91.5 today. as the dollar strengthened, but it's turned around fairly sharpish, and it's come right back down to this 91, the figure level, where it's been a bit of a pivot over the last couple of days. Now, just on the hourly charts, the mild bearish divergence just makes me wonder if we're going to come back down here and test this support in around the sort of 90.70, 90.65 area. We've got the 200-day moving average, 200-hour moving average, I should say, and the rising trend line to support it. Back under 90.5, though, then I'd be a little bit skeptical about. So maybe we may see a deeper correction. But until then, I kind of like the dollar still. The 4-hour charts are losing their enthusiasm today, and so we might get a bit of a drift lower. But as long as we remain above this sort of 90, 65, 70 area, I like the dollar for an eventual move back up here above this 91.5 level, and eventually to take us, as far as the daily chart's concerned, up towards this 38.2% FIBO resistance, which is at 91.90. And above there, we've got the 200-day moving average at around 92.25. If we were to go back below 91.5, though, then I do suspect we're probably heading back down to around this 90, the figure level, and possibly to the recent low, which is at around 89.85. That seems somewhere off at the moment, but and it could be a fairly range-bound day. There's not an awful lot out, as I say, to move the euro or the dollar one way or another. So maybe we just have some more choppy trade, and eventually, given that I like the euro to head lower, I think the dollar Swiss probably does head higher, but it may take a while. The Aussie's doing nothing, but we've got the CPI data later on today. I'm just wondering whether we are in the process of building a choppy head and shoulder base here, a reverse head and shoulder with a neckline at this sort of 88.40 level. If that's seen, then we're probably going up to 88.80, somewhere around there. But it will all hinge on the CPI. Now, a low reading on the CPI will increase the speculation of an RBA cut again. Now, as I've said many times before, we're heading down into strong support down here, 87.30, 87.60, somewhere around there. A break of this 87.30 then heads down towards 86.30, which is a multi-year low. So wait for the CPI, but then go with the flow and see what happens there. The Kiwi spiked higher after that CPI reading yesterday. It's consolidated since. I'm really unconvinced either way on the Kiwi. While we sit around this 83 figure 20 level, we could head in either direction. It just remains too choppy to predict one way or another. And if we do head above 83.30, then I think we're heading back towards this 83.60 level, and above there goes to 84.30, 84.32 I think was that high. So we wait and see on that one. Back below 83 though, just heads back into the 82, 83 consolidation area, and it's going to be choppy. Looking further out, the dailies are not really giving us a hint in either direction, and so quite honestly I'd probably give that a bit of a wide berth. So that's about it for today. As I say, we've got the CPI coming up in Australia, and then the BOJ decision, the press conference later on. Once that's done with, then the Bank of England minutes and the UK jobs report will be the European highlight. And then, of course, we've got the Davos Economic Forum. I wouldn't expect too much out of that, but you never know. There might be the odd statement that moves the market. So that's about it for today. Have a very good one, and we'll talk to you tomorrow. Cheers.